All right, everybody. Welcome back to Strongman Personal Finance. Now, today, I decided, because I have a lot of spare time, I'm not a busy boy, I'm on leave, that I would do a quick napkin math analysis of where Tesla could possibly be in 10 years, depending on growth rates in sales and price to sales multiples in 2030. So I made this beautiful chart for your viewing pleasure, which gives you a bunch of different scenarios of where Tesla will be in 10 years. Now, there's 1,000 different ways to project a company. And in this one, I just decided to use price to sales as a multiple of revenues. And what I did was, I basically figured out that Tesla is still massively overvalued, and that the assumptions built into Tesla's growth are freaking ridiculous, okay? Now, let me explain some of the data that I have on here. So first of all, I downloaded Tesla's financial results from Morningstar. So you can see the revenue growth from 2011 all the way to 2020. It's had some pretty significant growth. So what I did was, I said, okay, what is Tesla's current market cap? It's roughly $630 billion. And then I took Tesla's 2020 revenue and I applied growth assumptions to that revenue over a 10-year period using different growth rates. And what I also did was I wanted to show you how Tesla's compounded annual growth in revenue has changed over time. So over the past 9 years, Tesla has grown their revenues by a compounded rate of 75%, which is pretty crazy. I mean, it is a new upstart company, so that doesn't surprise me. But you kind of see a trend over time, because over the last 5 years, they've grown their revenue by 50% compounded every year. Over the last 2 years, 21%, and over the last year, 28%. So if you think about it, the bigger a company grows, the less likely their revenue is to grow at an astounding rate. Their revenue growth will probably slow down. And that's just how the industry is. That's how every company is. Even Tesla, you Tesla fanatics. So by looking at this data, I built this chart. So here's what we're going to do. So what I did was I said, okay, on the column here, I have estimated percentage growth rates compounded every year. So for example, if Tesla grows its revenue at a 1% compounded rate over the next 10 years, and the price to sales multiple for the auto industry is $1 in 10 years, this would be the market capitalization of Tesla, which is $34 billion. Now, is that likely? No, it's not. I think Tesla's going to grow faster than 1%. But this kind of gives you a snapshot and shows you every possible different scenario. And then you can use this data to really figure out, well, what is a reasonable growth rate for Tesla's revenue over the next 10 years? And what would the price to sales ratio be for the auto industry or even the market as a whole in 10 years? So let's go check this out. I'm going to zoom out a little bit. So what I did was I highlighted in green everything that resulted in Tesla having a larger market cap by the year 2030. So the first possible scenario where Tesla's market cap will grow. And if you remember, just because the market cap grows doesn't mean you're going to make a ton of money over the next 10 years. So the first example of the market cap for Tesla growing is if Tesla grows its revenue by 21% over the next 10 years every year, and the price to sales ratio of the auto industry or the market as a whole is 3, Tesla will have a market capitalization of $636 billion after 10 years. Now you may be like, wow, that's a growth, strong man. Well, $636 billion from, what is it today? $630 billion is a horribly trash return. But the further down you go, the higher the growth rate, the higher the market cap. So at the best case scenario, let's say the price to sales ratio for the market as a whole, or for the auto industry, or for Tesla, is 3. And the company grows its revenues at a compounded rate of 50% every year, which is insanely crazy. Then Tesla would have a market cap of $5.4 trillion. Now, the question you have to ask yourself is Is that likely? No, I don't think it is. I think that's insanely ridiculous. I mean, I think even the auto industry's market cap, and I actually pulled that up, this freaking window opens. So right now, the price to sales ratio as of January 2020 for the auto and truck industry, and remember, there's a lot of bubbleliciousness going on, is 2.71. So let's say, assuming, and a lot of people are saying Tesla is going to grow at 40% its revenues over time over the next 10 years. So let's say the price to sales ratio is 2.75 and they grow their revenues at 40% per year. So let's find 40, which is right here. And let's look over at 2.75. So if they grow their revenues at 40% every year going forward, and you can see the slowdown. It's actually like 21%, 28% over the last year and 2 years. And the price to sales ratio is 2.75 for Tesla or the market as a whole. Tesla would be a $2.5 trillion company. So here's a lesson that I want to impart on you. And then I'm going to kind of give you what I think Tesla's market cap could potentially be in 10 years. The lesson is you can put in any numbers you want. You can project any kind of growth rate at any type of multiple of anything. You can do a multiple of free cash flow, a multiple of earnings, multiple of sales. You can put whatever assumptions you want on there and demonstrate your point that, oh, see, it's going to grow and be a $5 trillion company. But you have to ask yourself, what is reasonable? What is likely to happen? Now, in my opinion, I think best case, and if you look at the slowdown in growth, okay, they went from 75% over the last 9 years, 50% over the last 5 years, and then 21% over the last 2 years and 28% over the last year. I think best case, over 10 years, they're going to grow their revenue maybe 20%, okay? And now, once we know that, we need to say, okay, what will the price to sales ratio of the auto industry probably be in 10 years? So I went to S&P 500 price to sales ratio. And right now you can see that the price to sales ratio has gone to pretty historical highs as of right now, 3.21. It's pretty ridiculous. But look at the median, 1.5. 1.5. And the mean is 1.62. So we'll use the mean. We'll say 1.5. That's probably closer. So if Tesla grows at 20%, and this is probably a maximum, and the price to sales ratio is 1.5, what is that market cap? $292 billion. I mean, that's kind of trash, ladies and gentlemen. But if Tesla grows faster, okay, let's say that is crazy, and it grows at 30%, and the multiple is 1.5, $652 billion market cap. How much growth is that, ladies and gentlemen? How much freaking growth is that? Now, if they get lucky and their market cap is the price to sales ratio is 1.75 in 10 years, okay, they'll have a market cap of $760 billion. But even then, going from 630 to 760 over 10 years ain't that good, ladies and gentlemen. The market typically doubles every 7 years, every 7 to 10 years. I mean, I don't know. See, what these YouTubers are doing is they're saying, oh, Tesla's going to grow its revenues 40% every year, and they're going to have a price to sales ratio. They're probably using the current price to sales ratio of the market, which is like 3. Oh, it's going to be a $2.7 trillion company. But is that reasonable? I think we're not in a new age. And here's freaking, whatchamacallit, Morningstar, fair value 550. Okay. But I think we're in historically high or expensive times. So if you really look at Tesla and you look at the mean price to sales ratio of the market, 1.6, and multiply that by a reasonable rate of return, even if it's 30% revenue growth per year every year going forward, you're not going to make that much money if you buy Tesla right now. You miss the freaking boat, okay? So when these YouTubers give you these insane assumptions, just remember, they're factoring in crazy high growth rates. And Tesla has a ton of competitors that are all entering the EV market. And they're going to say, oh, well, it's not just a car company. Look at the freaking 10K. Look at the trends in revenue by segment. Tesla has the vast majority of its revenues coming from cars. And until I see differently, I'm not going to apply any other price to sales multiple. But at the end of the day, just using the median price to sales multiple, Tesla is massively overvalued and has insane growth assumptions built into it. I would not touch this stock, okay? Now, if you disagree with my analysis, because I mean, there's 1,000 ways to value a company. I just use price to sales and projected revenue growth. I mean, if you disagree, you can leave a comment. We can have a discussion. But I would not buy this company. There's too much probability that the insane growth assumptions are not going to be realized, because in the world, across the globe, there are dozens, hundreds of car companies. And there's lots of car companies that are way bigger than Tesla. And they can leverage their size to compete with Tesla and crush them. Okay? So that's it. This is what I made. This beautiful analysis. I can see why these clowns think it's going to be $4 trillion. Oh, there's going to be a 46% growth rate every year, and the price to sales ratio of the market's going to be 3. So it's going to be a $4 trillion company. I mean, come on. Stop smoking crack. I'm sick of you clowns. Look at the growth rate changes over time. 75, down to 50, down to 21, and then 28, okay? That's not going to continue. You can't just grow massively forever and ever, especially over the next 10 years. But that's it, ladies and gentlemen. If you don't like this, call a lawyer. Call a financial advisor. But if you did like this, and you like how I kind of look at like basic multiples of revenue or whatever you want to use, then please consider liking the video, subscribing to my channel, and having a wonderful, delicious, superstitious, cockalicious day.